the ways of raising finance through in primary market under the topic capital market. It's part of Unit 6 resource mobilization. So there are 4 ways how companies can arrange capital by issuing the shares or to whom they can sell new shares. One is the public issue, second is private placement, right issue and offer to employees. Today we'll discuss about public issue. The another name of public issue is going public. You know why it is called going public? Because generally these shares are issued by private companies. Private company is the company which has not issued shares to general public. Rather, they issue the shares to their nearby friends, family, and arrange the capital. But public company, now when private company want to raise capital from the market, then private company issues shares to general public. So here private company goes public. That's why this public issue has another name, that is going public. So what is the meaning of public issue? Under public issue, when a private company issues the shares in the market for the first time by issuing the prospectus. This is called as public issue. What is prospectus? Prospectus is a kind of invitation which is given to general public that you come and buy our shares. In prospectus, company write down all their details, that what are their past profits and where they are planning to use that money which will be invested by the investors. So a prospectus is a very important document on whose basis the investor will decide that whether they are interested in buying the shares of company or not. So what is public issue? Public issue is raising of funds directly from public through the issue of prospectus. This is one of the most popular method of raising the finance. So when a private company issues public issue, it becomes a public company. And companies have to be very careful while issuing these public issue. And public issue is not like something very easy to raise capital. Public issue is a very complicated and very difficult way to raise capital from, because public issue involves so many legal formalities. You need to make the prospectus, you need to draft the prospectus, you need to list your company with the stock exchange, because under that stock exchange your further buying and selling of your issued shares will be done. Then you have to sign agreements, you have to hire the brokers, underwriters. So it involves so much cost as well as so much formality. Then what are the advantages of public issue? Why companies go for public issue? The very first advantage and the primary advantage. If you get a question in your exams, what is the primary advantage? What is the primary advantage of public issue? Then you will write down this answer. The primary advantage of public issue is access to capital. See, why companies prefer to raise capital by issuing the shares instead of taking loan from bank? Because if they will take loan from bank, then they have to pay the interest. They have to return the money. But in case of public issue, in case of shares, there is no such tension of giving the interest, because in the shareholders, what we pay them the dividend, and dividend is to be paid at the time of if I earn the profit. If my company will go into losses, I don't have to pay any dividend. On the other hand, I don't have to return the money of my shareholders. If any of my shareholder want his money back, then he has to go and sell his shares in the market. If he wants money back from the company itself, then he has to wait for till the winding up. That's why it is very comfortable for the companies to raise capital through public issue. No tension of interest in case of as if I would have taken the loan. No worry to repay the loan as well. So, and what these investors get in return of their investment. These entrepreneurs generally seek appreciation of their investment. They expect that if they have bought the shares of 10 lakh rupees, when they sell, they should get minimum 20 lakh rupees. This is called appreciation of investment, and possibly the dividend. If you are a Class 12 entrepreneurship student, then this line is really important for you, because it's a 1 marker question which number of times has been repeated by CBSE in board exam. What is the reward expected by IPO investors? It is appreciation of their investment and dividend. Other than this, what is the benefit? Where they can use this money? Whatever they will arrange by issuing this public issue. The entrepreneur can use this money for variety of purposes. That is for growth. It can use for growth and expansion. It can use for retiring existing debt. They can use this money to repay the debts. Whatever burden they have on their head, they can use it for that. They can use it for acquisition. They can use it for acquiring more capital. They can use it for acquiring new businesses. Then this money can be used for corporate marketing and development. They can use it for further growth and development of their business. So this is the primary objective of public issue. Another benefit of public issue is, other advantages of public issue are, first is higher valuation. As I said to you, when a private company issues shares to public, then it becomes a public company. And in market, public company always have more valuation than a private company. Banks also prefer to give loan to a public company instead of giving a private company. Okay, this company has issued shares in the market. It means it must have something that people have bought its shares. So it helps in creating positive reputation of company, which helps in increasing the valuation of public company. So a company which issues shares in the market has more valuation than private company. Second is incentives. This stock option means offering the shares to employees. Companies can also use these shares to offer to their employees, which gives the feeling of ownership to their employees. Then reduced business environment requirement. See, if I arrange capital through public issue, I'll have enough of the money. I don't need to borrow. I don't need to look for other sources of raising finance after this. Then acquisition and mergers, whatever money I have raised, I can use this money for acquisitions and merger. I can use it for buying new businesses. I can use it to merge some small entities in my business to expand it. Then we have liquidity. Liquidity means to convert it into cash. In case of public, once you issue your shares in the market, then your investors, your directors, your employees, everybody, anybody who don't want to keep their investment can go and sell their shares in the stock market anytime. So it gives liquidity to their investment, which means they can convert their shares into cash anytime. Then you must be surprising that what this HIRAL BCPL is written here. This is a code word which I had created for my students. That is H for higher valuation, I for incentives, R for reduced business requirement, A for acquisitions and mergers, L for liquidity. And BCPL are next 4 sub-advantages. First is benchmark trading price. See, once you have issued shares in the market, for the very first time, whatever price you fixed at that time, that price becomes the benchmark. Now, all next set of securities the securities price will be higher than this benchmark. Done. Then we have capital formation. Definitely, you can arrange. Investors know, now I'll do the investment. I can convert this investment into cash anytime. So it encourages them to do more and more investment, which helps in increasing the capital, or which leads to capital formation. Then there is prestige. As I said you, a company which has issued public issue, or public company has more credibility, public company has more prestige in market than the private company. Because as I said, the people have a kind of mindset, okay, this company has issued public shares. It means people have trust in this company. That is why people have bought these shares. So which helps in increasing the reputation of company in the market. Then last one is less dilution. See, further issue, when you issue the shares, generally, let's say if you have already issued shares in the market, and now again you want to issue new shares in the market, then what you can do, you can issue these new shares to your already existing shareholders. This may help in less dilution. This may help in sharing ownership with less number of people, rather sharing ownership with people who are already owner of my business. So these are the advantages of public issue. In next class, we'll discuss about the drawbacks of public issue. Thank you very much for watching this video. For more case studies, MCQs, you can visit our website studyresearch.in.